Welcome to the STR Home Financing Podcast, where we believe a legacy is something you build, not just something you leave behind. And now, here's your host, Jeff Chisum.
Hey, this is Jeff Chisum with the STR Home Financing Podcast. Welcome to episode 60. Feels like a milestone, 60. Sounds like a big number. It is. 60 episodes. So we kick off January 2025 with some big news. But first, I want to take a step back in history to kind of lead up to what I feel maybe, possibly, really could be the biggest news of 2025 when it comes to financing real estate. So we go back to 2008. Everybody knows what that year signifies: the mortgage crisis, the mortgage crash, the bubble that popped. So we had all these defaults. We had foreclosures, we had forbearance programs enter the system, and that just so happened to be the year that yours truly entered mortgage originations. Welcome to your new career. We'll never forget it. Was working for City Mortgage Consumer Direct at the time. I went on the sales floor March of 2008. And as the months went by, we saw programs disappear, and then it was the low appraisals. It was the adjustable rate mortgages that were adjusting, and they were adjusting extremely high. People could not afford the payment, but they couldn't refinance. So that's when we saw the different refinance programs come in, where you could basically refinance the balance. Didn't really matter what the appraisal was necessarily. So with that, and during, that's when the feds took over conservatorship of Fannie and Freddie, and that still exists to this day. So you're going to see in the news, because President Trump made a big push for removing Fannie and Freddie from government control and returning it as a privately traded entities. And so along the way, under this conservatorship, we've seen some different changes that the feds have made to try to make sure that they had performing entities. So there were different policy changes made. Fannie and Freddie tightened up their underwriting restrictions. So you no longer had the SEVAs, the NINAs. So if you weren't around for those, it was stated income verified assets for SEVA. So that was a big deal for self-employed people, because basically, as long as you had a certain amount of assets, they were going to use your stated income for your qualifying income. And then there was the no income, no assets. So you weren't using income amount, no asset amount. So really, as long as you had acceptable credit scores, you could do a conventional Fannie or Freddie loan. So went away. No longer existed. No longer were Fannie and Freddie in the business of what was considered questionable or risky loans. So no longer doing loans where income wasn't verified through documentation, W-2s, pay statements, tax returns. Move on to 2021, and this is when the feds tightened up even more when it came to investment property loans and second home occupancy loans. So it was a very anti-investor move, because the investors were seen as contributing to the housing shortage that was being experienced. So this was one of their fixes: is we're going to remove investors from the marketplace. We're going to make it harder, more expensive for them to do loans with Fannie and Freddie, and reduce the population of buyers out on the market that were investors, that were buying up properties that people would occupy as their primary residence. So what did that look like? They made an announcement, and this was September of 2021, I believe, that they were going to reduce the amount of second home and investment property loans that they would purchase in half. So they were going to go from 14% of what was in their portfolio as far as the loans that they purchased down to 7%. So if you are an independent mortgage bank, you are a bank, broker that originated loans, and you're going to sell those to Fannie and Freddie, do you really think that you wanted to be over your ratios and potentially damage your ability to sell those loans directly to Fannie and Freddie? Absolutely not. So what did that look like? How was that going to be achieved? Because it was going to have to be something drastic, because they were already overrunning those numbers of 14%. So now they had to achieve this level of 7%. So loan level pricing adjusters, you may have heard those. What that looks like, if you've been in the market since that happened, you know exactly what that scenario looked like. After those loan level pricing adjusters were put in place, so basically if it was an investment property or second home, they were going to tag on additional fees. The higher the loan to value, so the lower the down payment, the higher the fees. So in my case, since 2020, I had found a huge opportunity in educating people about the 10% down second home occupancy loan. All of a sudden, those clients that I was working with that were going to use that vehicle to go and purchase that vacation home, that lifestyle asset, they weren't talking to me. Maybe they were talking to someone else. They were getting quotes overnight where it may have been no points for the interest rate. It was going up to 3 and 4% with a rate that was 1 to 2% higher. So brokers, independent mortgage bankers were telling people that loan doesn't even exist anymore. And really the case was it was there, but it was so expensive that you couldn't pass a fees test. So luckily, we found alternatives. We found different ways of structuring those loans where they weren't as expensive. And really, that speaks to why you want to deal with an expert. You want to deal with not just a generalist. You want to deal with someone that works with us on a daily basis. We found solutions, because this is 100% of our business, where we could structure loans to minimize, reduce those costs that the other companies were having to charge. Where does that lead us to when it comes to what I feel is the biggest news of 2025? So those limits that were put in place been removed. So January the 5th, it was announced that those restrictions would be lifted. We've heard that before, though. We've heard back in 2023 that those were going to be removed. Ended up they weren't. So when I say this possibly could be the biggest news of 2025, we're just going to have to wait and see. But I want to bring it to your attention because it could bring significant opportunity from a cost standpoint related to the financing of buying second homes. That's very significant. So I want you to be on the lookout. If you want to be kept updated on this latest information, go to my website, strhomefinancing.com, and you can provide your email information with a note. Just keep me updated. This is that time of year where we're having conversations around what are you doing this year? What are your plans? And if that includes buying a second home, a short-term rental, then we need to put you in a position to take action. So that really is, let's get that pre-approval process started. Let's get you underway in that process. You're not in a reactive mode when it comes to the time where you find that amazing property. You're in a position where you're prepared, you're ready to go. You know the numbers, you've been validated, you've got the letter. So go to my website, strhomefinancing.com. You can go ahead and schedule a call with me just for preliminary discussions, or if you want to jump into an application, we've got the link there. But hope this is as exciting possibly to you as it possibly was to me. Until next time.
Jeff Chisum is a registered mortgage loan officer with CMG Home Loans, NMLS ID 1820. CMG Home Loans is an equal housing lender. All programs, products, and terms discussed on this show are subject to change without notice.